Let's go to some stock picks, Rowan. You're going with Exor, listed in, I think, the Netherlands.
Yeah, so it's the Agnelli family's holding company for the material asset is actually Ferrari, with the ticker race, and also Stellantis, which is largely Fiat and Chrysler, and some other interesting assets, Philips in health tech. So overall, it's been very volatile, partly because of the anticipated tariffs and the impact that would have on motor manufacturing, particularly exporting into the US. I think what's happened now is that has flown, and now we understand what the actual tariffs are. So in that volatility, the discount went to greater than 50% discount to its underlying NAV of those listed assets. So it's a really good entry point, and I think the companies can plan, the underlying companies can plan based on the known tariff environment and move up from here. So that's why we think it's a sort of double discount entry point into that sort of motor sector, and quite an opportune investment.
Okay, and it has got a whole bunch in its portfolio, including some Harmony. Chantal, you're going with the Foschini Group, and I think they've got a Capital Markets Day later in the week.
Exactly. They have a capital markets day at the end of the week, and generally these capital markets days are well received by investors, because the company gives you their long-term plans. They tell you what's really great about the company, and a lot of guys who are sitting on the fence, particularly from a long-term investment perspective, might decide to pull the trigger at that point. But that is not the only story here. The stock has been sold off in line with the rest of the retailers year to date, or over 1 year. I think we're down 30% for the clothing retailers in South Africa, even though we still continue to see pretty decent revenue growth and decent profitability as well. I think the outlook looks okay, but Foschini, I think, will probably benefit from some market share gains, the credit business, the new acquisitions that they have, the cross-selling opportunities between some of their operations from a credit rollout perspective. And I think that there's a lot to be positive about, and the share price is not reflecting that. I mean, leaders in local manufacturing when it comes to clothing, quick response, and the online platform also gaining traction quite nicely.
Yeah, and the price back at where it was 3 years ago, and we have to say, the South African consumer is better off than they were 3 years ago. Interest rates are down, inflation is down. That's all for Stockwatch today. Thanks to our guest Chantal Marx, F&B Wealth and Investments, the Foschini Group, Rowan Williams from Nitrogen Fund Managers. Exor up next. The close. Stay watching.